Hello and welcome to FinextraTV. I'm Hannah Wallace, and kindly joining us in the studio today is Ian Hawkins from Nasdaq. Ian, thank you very much for taking the time to speak with us today.
Pleasure, Hannah.
Really good to have you here and looking forward to covering this topic. We're talking about surveillance and also off the back of your recent white paper that focuses on monitoring across related instruments. A really interesting one that we'll delve into the detail more later on. But first, it'd be great if you could take a step back and tell us about some of those key trends you're seeing across the surveillance space at the moment.
So I think the key trends we're seeing, as well as related instruments, really around the increased complexity of people's trading operation. There is more and more trading venues, there is much more complexity in people's businesses, which means necessarily their surveillance will get more and more complicated as time goes on. As well as that, there is the increasing regulatory pressure. There is the constant regulatory pressure that people are under, new regulations coming out, new complexities, etc. The big problem that people seem to be facing at the moment is just sheer volume of data. There's a colossal amount out there. There's a colossal amount that you need to make sense of, collate and pull together, and then be able to get sensible surveillance out of that. And the biggest thing that we are really seeing at the moment is around related securities.
Sure. Well, thank you very much for highlighting these trends for us and some big challenges there as well. So could you highlight then any recent prosecutions, particularly in this area?
Absolutely. I mean, there have been a number over the last few years. They do go back. They do go back. The behaviour has been going on for a significant amount of time, and with those prosecutions, often they do take a while to come through. So we are seeing things going back, as far as, or the data going back as far as sort of 2001, 2002, things like that. But the range of different prosecutions we're seeing. So there is, of course, on the back of the white paper, there was the AFM case relating to CFDs and equities monitoring on the equities manipulation on the back of that. But also you see that across the wide range of instrument types. So particularly in the US, so the CFTC has been very prominent in the last few years, and that covers fixed income futures. It could be agricultural futures, it could be commodities futures, many different types of manipulation covering in all of these cases. Obviously, I won't name the firms, but there are. But yeah, the regulators are very, very much coming after people at the moment, and yeah, there's many prosecutions that are around.
All right, that's quite alarming. So I'm interested to hear also how that differs from single instrument manipulation. Then, what about that?
So single instrument manipulation, if you like, is a little bit straightforward. You're talking about buying security A, and manipulating it up, and then selling security A. So everything sort of contained in one place on one market, or potentially on multiple markets. But the single instrument is fundamentally, it is the same thing. With related instruments, you're talking about manipulating one instrument to benefit on another. So you have an operand leg, if you like, where you're manipulating the price, pushing it up and down, and you have a profit being taken elsewhere. Now that profit, when we say elsewhere, could be any number of different places. There are, it could be in a different market, it could be in a different instrument altogether, it could be in something that's completely unrelated, obviously unrelated, but those prices may well be correlated. So there's a really good example that we always use. If you think about oil futures on ICE, for example, on the Brent crude futures on ICE, they are incredibly highly correlated with WTI futures on NYMEX in the US. Right. They go up and down in absolute lockstep. So you can potentially manipulate one and then trade on the other. So that's fundamentally what the difference is.
All right, that's really interesting. Thank you for sharing those examples with us. And now coming back to the challenges, what are those challenges around related instrument monitoring then?
Well, first and foremost, it's just the complexity. If we follow with the oil example that I touched upon earlier on, if you map together all of the instruments that are traded that are related to oil, or all of the products that are traded related to oil, you get to a list over 3,000 very, very quickly and very, very easily. And that's just products. So we haven't started to talk about contracts at that point. As soon as you start to talk about contracts, options on futures, indexes, etc., it becomes many, many thousands immediately. So as well as the complexity of the actual nature of the business itself, you then have the global nature of that trading as well. So to follow the example again, we are talking about ICE trading in the UK, and we're talking about NYMEX trading in the US. And that's just two of the major indexes on oil. You then have the Abu Dhabi index as well. So then you have three.
Yeah.
So before long, everything gets very complicated. The other problem from a participant, from an institution perspective, is the actual entities that are trading may be the same, but may be named in different ways. So I might be trading as Ian on ICU, but I might be Hawkins on NYMEX. Pulling together and understanding what entities, what desks are trading where, and so the level of complexity of this is incredibly deep.
And that's hopefully where Nasdaq comes in. Perhaps you could end on telling us a bit more about the work you're doing in this space currently.
So we're prototyping that right now, and we're looking to see if we can detect where somebody is spoofing in one instrument and then trading another, and making sure we do that over geographically split locations. So we are examining exactly using the ICE and NYMEX example. We're also looking at soybean futures, which is another case that's come out recently. So we're trying to establish whether or not that is possible, and then when we can link the entities together and understand how we can visualize that and make it then easy to investigate. So that's currently what we're working on.
Well, Ian, thank you very much. Safe to say, watch this space and look forward to speaking to you further down the line. But for now, thank you very much.
Thanks, Hannah.